A quick reminder then this morning or overnight of some of the political risk attached to emerging markets, although political risk we talk about in many spheres these days. But this kind of outsized move that we're seeing in some of the South African assets, a clear reminder of what's happening, of the very domestic story, I guess, in South Africa.
I don't think any investors in South Africa, or certainly long-term investors in South Africa, not that they would have predicted that this particular event would have occurred, but to see these kind of moves in the rand, to see these kind of moves in long-term bond rates is not unusual by historic standards that you do see these events occurring. And so, yes, is it a little bit disturbing in the short term? Yes. But I suspect for those investors who've been there for a long time, I suspect this isn't really seen as a huge surprise, just something of doing business in that market, I'd suggest.
Yeah. Where are your favourite emerging markets at the moment? I've been drawn to the Indian story this morning because looking at Indian stocks, I pulled up this is a BTV 6701, actually around the Indian rupee, but Indian stocks, the best of the 10 biggest global equity markets. Indian rupee foreign share investment rises, optimism around the Modi story seemed to come to a fore. This is all the sort of first quarter, India being quite a good performer as we look back.
Well, I think Aberdeen has been very bullish on India for an awful long time, and that's really been driven by the fundamentals in the economy, the demographics. I think also that we're able to find good companies in that market, and I think that maybe contrasts a little bit with some of the other large emerging markets where perhaps the rule of law and the influence of government isn't perhaps as strong as it is in the Indian market. And so we've always been able to find really good companies that have been able to benefit from those very strong domestic trends. I think the main issue has always been valuation in that market, which has always been quite full. And sometimes getting fuller, but nonetheless, I think the long-term story there is quite compelling.
Long-term story is quite compelling. One of the big risks, I guess, has always been thought of as a risk, at least, is Fed tightening for emerging markets, and yet we saw emerging markets doing quite well in the first quarter, despite these increasingly the increasing moves towards tightening that we're seeing from the Fed. What are your expectations around Fed tightening? William Dudley, saying that it looks as if the risks around growth and inflation are shifting gradually to the upside. Are we being repositioned by the Fed this week? We've been talked at a lot.
Well, I think it really depends on how things play out and the varying different moving factors. Certainly, significant amounts of dollar strength against emerging market currencies is probably challenging for those markets. Yes, you also face FX and capital flow issues as well, and rising rates put pressure on some of those economies. But fundamentally, I think you have to look at why is it that interest rates are moving up, and if that's because the global economy, broadly speaking, is looking healthier. If you're seeing continued reasonably strong demand patterns in the US, and I think that's broadly positive. And again, I think everyone would say that a normalization of monetary policy in the developed world would probably be, on balance, helpful for the global economy. And so I think, yes, certainly we've been concerned since the taper tantrum about rising interest rates in the US. But I think if the reasons behind that are a fundamentally recovering economy and it happens in a steady and stable way, then I think that's quite positive. And we've seen that reflected in the first part of this year.
It's all about the underlying drivers then. So 2 more hikes from the Fed, would that be your expectation and something that markets can kind of take in their stride? With that in mind, where does the US investment story go for you?
Well, I think the US investment story on its own is a bit more challenging, and I think that's really driven by the fundamentals in the market, where stocks are expensive and the economy is certainly further through the cycle than other markets. I mean, we would look perhaps to Europe, and that's again not a contrarian call, but certainly we see more value in companies in those markets, and you see a domestic economic picture that's some way behind. I mean, you're only certainly starting to see the first signs of recovery really from the economy, while the American economy has been moving ahead at a reasonable rate for 4 or 5 years now. Europe has been continuing to struggle for some period of time, and you're starting to see the first sort of positive PMIs, the first sort of meaningful step forwards in GDP, which I think is good news.